Yeah, hello, welcome back, everybody. This is particularly boring, probably. I do not know because we talk now about invoicing details, ladies and gentlemen, for VAT cases, something which you can only deal with at the end of a case because in order to know how you have to write out the invoice, for example, if you have to confirm VAT in the price or not. In order to know that, you must already know if you have to pay VAT to the fiscal office or not, because if you don't have VAT, for example, because either if the transaction is tax-free or if it's tax liable, but the taxpayer is the customer. In those both cases, you don't have any possibility to confirm VAT in an invoice because where you don't pay VAT, you can't confirm that it was paid. So let's talk about the invoicing rules first. As you remember from the basics, the invoice is a very vital part of the whole VAT system because it's the legal basis for the input tax deduction which the customer can claim. Now, the customer needs a confirmation about the VAT which is included in the price, and the fiscal administration needs to check that invoice because they want to know if the person who wrote out the invoice really exists, if that person really pays taxes, if the transaction um, was perhaps invoiced twice. That was a very famous trick in former times yeah, to claim input tax deduction twice, and so on. So the fiscal administration has a list of information which it wants to see on the invoice in order to be able to check that everything is okay there and no bad tricks have been played. So the a basic list of information, or in certain cases even more, must be stated, must be given on the invoice. Otherwise, the invoice is totally invalid, and so you lose your right to input tax deduction as long as the invoice does not yet comply with the full legal requirements. So, although it seems to be boring, this, ladies and gentlemen, is the only place or the only way how between two business owners you can lose money. If you write out an invoice in a wrong way, and if on the other side the business customer accepts that invoice, then thousands of money can be effectively lost. So this is like writing out a check without signing it or without naming the bank account or the bank. Then you don't need to wait for other problems. The problem of writing out a wrong invoice is very much enough of a problem. You don't need others than this can perfectly ruin your enterprise if that can be found that you accepted wrong invoices or that you wrote out them. And this is not a very rare event in real life. I once met a firm where they in confidence told me that after 1.5 years they got an audit from an auditor, and that auditor, although specialized on checking their financial statements, found out that they had a problem with writing out their invoices. And so the auditor said, before I testify that your accounting is okay, I give you the very, very strong advice to revoke all your invoices to every customer which you wrote out during the first 1.5 years of the existence of your firm, and to reissue all that stuff. By the way, that later turned out to be one of the most well-prepared enterprises in VAT matters, because after that experience, um, they really knew the importance of being up to date according or concerning all VAT issues, but until they made that experience, they were evidently a bit too overconfident, and so the financial damage was immense. Yeah, that was probably 2 months of additional work for the whole accounting department, and so be on your guard when it comes to invoicing rules. Naturally, the matter itself is rather boring. You just have to check a list that everything is okay, and that list is in the law, but you must force your people to read it, and you must force yourself and your whole department to get regular updates from experts. So to have some in-house training regularly, that new developments and new interpretations are not missed by you. It's enormously important. The most parts of an invoice which must be shown and which will be required by the member states in an invoice have been harmonized under EU law because the whole matter became more and more important. You can find that in the Articles 217 and the fourth following ones, especially in 226 to 231. In German law, the rules for what an invoice must contain can be found in paragraph 14, section 4 USDG. That's the basic list which must be fulfilled in every invoice, and in certain cases you need additional information to place on an invoice, or there is a deviation, and that is then all concentrated in paragraph 14a USDG. So these are the two ones which you have to check at every end of a case in order to make some prey. And yeah, there are some cases where the control of input tax deduction does not require the possession of a correct invoice at all, because in some constellations you don't need to check if the invoice was written out by an entrepreneur which really exists, if this entrepreneur really pays his or her taxes. These are those cases where the customer himself, herself, or itself pays the tax himself, herself, or so. Why? Well, remember the cases of paragraph 13b. There, the customer, who is also a business owner, pays the VAT on a service or on a good acquired himself in his own tax declaration. And so, let's say on the next page of the same tax declaration, he or she then claims input tax deduction for that. Well, you don't need an invoice to check if that has been done correctly, because the fiscal office just has to check your own accounting and your own tax declaration. Did you pay the input tax which you want to deduct 2 pages later? Yes, it's evidently possible. They will probably not open much fights over that with you, because imagine you made an error and the input which you bought was not taxable at all. Then you wrongly paid, let's say, 190 euro on page 2 of your tax declaration. I don't know if it's page 2, but you know what I mean. And then you deduct it 2 pages later on page 4 minus 190. So if you made an error, both was wrong, and the result of your error would be plus minus 0. So probably there is no reason for big fights over these cases. The same in case of an intra-community acquisition of goods. You declare the tax for that, let's say on page 3 of your tax declaration, you deduct it as input tax on page 4, so one can simply check your own tax declaration. The invoice is not needed as a document of proof. So the first thing we can now sum up is that the invoice is only needed to be absolutely correct if the invoice is about a gross amount which contains VAT, which was paid from your business partner, not by yourself. But this is in reality 99.9% of all cases, in most cases. And so the invoice must be correct. What you now must know, there are still some minor details which are different in the law of the different EU member states. So when a transaction is taxable in Germany, then German law applies and it's not taxable, let's say, under Spanish or Dutch law. Now imagine an entrepreneur is Dutch, but has done something which is taxable in Germany. Then naturally all the German rules apply to the case and not the Dutch ones. That also implies that for writing out the invoice, the Dutch entrepreneur has to follow German rules. And now German rules especially require that you name, your address, and your taxpayer's identification number on the invoice. Naturally, if it's a German VAT invoice, you have to give them your German VAT identification number or your German taxpayer's identification number. Why? Well, the taxpayer's identification number is needed to contact, if wanted, the entrepreneur's tax office in order to check if the guy is really known there, exists, and pays taxes there. Now, if you don't even have a German taxpayer's identification number or VAT identification number, you could regard that as a kind of open admission that you never intend to pay your taxes in Germany. So it's clear that an entrepreneur from outside Germany, before that person can write out an invoice confirming German VAT, needs a VAT identification number from Germany or a German taxpayer's identification number. That brings along the nice side effect that you cannot even invoice your customer before you got that taxpayer number. And that means your customer will never pay you before you got a taxpayer's identification number. So the requirement or the recommendation is, in practice, if ever you do something which gets taxable in another country, the first thing you should do is inform the fiscal authorities there that you want a taxpayer identification number issued by them. Now there is one case where that makes no sense or would be superfluous bureaucracy, in cases of reverse charge or so, because in case of a reverse charge case, the transaction is taxable in the other country, but the tax is not to be paid by you as entrepreneur, but by your customer. And so the invoice which you write out will be a net invoice. And now the idea of the whole cross-border case reverse charge system was to simplify bureaucracy and to spare you the contact with the foreign tax authority. That would backfire, or that would be entirely senseless if you were forced to apply for the foreign taxpayer's identification number. So some years ago, EU law said, okay, in cases where a foreign entrepreneur does something which is taxable in the inland of a state and the tax is paid by the customer, the foreign entrepreneur is allowed to write out the invoice under the rules of his or her home state. That was frequently done before, but officially not permitted. So after a while, they found out the problem and said, okay, we must officially allow that. You can find this permission in paragraph 14.7 of the German USDG. Foreign entrepreneurs don't need to write out a German invoice, but can stick to their home state rules if no tax is to be paid by them. And the legal rule for the reciprocal case, for the case the other way around, is to be found in 14a, section 1 USDG, wherever a German entrepreneur does something which is not taxable in Germany but in a foreign state, where the tax has to be paid locally by the customer, there German invoicing rules extend to that situation, although the situation is not taxable in Germany but in the foreign EU state. Well, if you want to get an overview over the details, open your translations or your original German text of the Umsatzsteuergesetz and look through the whole paragraph 14, section 4. All numbers must always be fulfilled if there is no explicit deviation in 14a. 14a is the list of the specific cases where a deviation is demanded. It gets longer and longer, naturally, because the world gets more and more complicated. One of the most important things is if you have a cross-border service between entrepreneurs of different EU states, which is covered by 3A2 and reverse charge rule, then one checks if everything has been done correctly by way of a recapitulative statement, in German zusammenfassende Meldung, ZM, where then, in order to have that working, your enterprise needs the VAT identification number of your business customer, and have to communicate that number and the net amount which you sold or which you delivered or which you made with that business partner in a given period of time. You have to communicate that in an automatic information exchange system of the European Union, and the information then arrives at the fiscal office of your customer, and there they will check if the amounts declared by your customer in his or her tax declaration correspond to the amounts which you say you have made with them. If there is a discrepancy, they know one of both made a mistake and will take up investigations where the mistakes comes from and who made the mistake. And in order to have that working, naturally you need to know the VAT identification number. And that is why the law says in all the member states, if such a transaction is made, the VAT identification number of both parties involved must be named on the invoice, so that somebody who comes and has a tax audit directly sees on your invoice, okay, the VAT numbers were known. If the VAT numbers on the invoice are not named, then a tax auditor will directly have the reasonable suspicion that probably the formal obligations have not been kept properly. Because if you didn't know the VAT identification number on the date when you made the invoice, you probably were not able to fulfill your formal requirements concerning the recapitulative statements. And so they can directly take up investigations if and what went wrong. Okay. Now, naturally, the same is the case in the case of an intra-community delivery of a good. In that case, we will have that later. In that case, a good is delivered cross-border from one EU state to an entrepreneur in another EU state. And then in the state where it comes from, this is free of tax. And the tax on it has to be paid in the country of destination by the business customer there. Naturally, in order to check that the good is not lost and that tax is not forgotten, you again use that information system of the EU. And in order to have that functioning properly, you need to give the VAT identification number of your business customer and type in the net amount which you delivered to that customer. Then again, the authorities get the information in the state of the customer from the automatic exchange system, and they compare the amounts which they get from there with the tax declaration of the customer. And if there is a deviation, they know something went wrong. Either the supplier of the good made a mistake, or the customer made a mistake, or one of them tried to commit tax fraud, so they take up investigations. And that again is only possible if the deliverer and the customer know each other's VAT ID number. And that is why also in that case it is an additional requirement that the VAT ID numbers of the two parties involved are printed on the invoice. Then the people involved can directly check if their VAT ID numbers are stated correctly, because otherwise it would be a guarantee that mistakes happen. And an auditor can directly have a look and see, okay, the VAT identification numbers are on the invoice, so they could fulfill their recapitulative statement formal obligations, or the VAT ID numbers are missing, so the plausibility is nearly overwhelmingly high that they didn't fulfill the formal obligations, so that things can have gone wrong, and so can take up very specific targeted investigations, what went wrong, and if there was a case of attempted tax fraud or not. So one thing we can just store in our memories for eternity is wherever the recapitulative statement has to be filled out, wherever the VAT identification number has a significance for the treatment of a case, it has to be printed on the invoice. And when it has to be printed on the invoice, then always the VAT ID numbers of both parties involved have to be given, so of the supplier and of the customer. Yeah, and as you have seen up to now, even the camera felt bored and has frozen the picture. But I hope I changed the equipment now a bit, and I hope it's going to be better. Which other things can we say? In cases where paragraph 13b2 applies, so reverse charge cases where not everything is harmonized in the whole EU, there the entrepreneur is forbidden to show VAT on the invoice, because if the entrepreneur does not pay VAT to the fiscal office, he or she can also not confirm that VAT is confirmed in the price. So then the invoice must only name the net amount, and the net amount will be the price which the customer pays over to the entrepreneur. Furthermore, probably if you write out an invoice and don't confirm VAT, that might make a tax inspector nervous. And it might also make your business partner a bit nervous. Why don't you charge us VAT? So to avoid confusion, you are required in such cases to make a printed hint on the invoice which says Steuerschuldnerschaft des Leistungsempfängers, which has the same meaning as reverse charge case, or tax to be paid by you, the customer, yourself. And that must be added on the invoice. The legal rule for that is in 14a5. But the idea behind it is otherwise confusion would come up. Customer probably thinks the guy has forgotten to confirm the VAT, this invoice is worthless, I protest and send it back, don't pay it, or ask, what the hell did you think about VAT obligations? And so if there is that remark on the invoice, your customer can directly understand why you renounced on confirmation of VAT. And if your customer thinks your treatment of the case is wrong, they can communicate with you, you can debate about what happens and what was correct, so that you reach consent and can deal with the matter properly. And the customer will not forget if it's correct that it's a 13B case. Your customer will not forget to treat the case correctly. Yeah. These are the most interesting peculiarities. By the way, what I can still add is, for example, if you have to confirm no VAT because the matter is tax-free, so that even your customer does not have to pay VAT on the amount, then you are also required to make a remark on the invoice where you state that there is a tax exemption, so that your customer can check and can find out, okay, it's not a mistake, VAT has not been forgotten, but indeed VAT was left away on purpose because there is a certain tax exemption. It is usually required as good practice that you not only say there is a tax exemption, but also state which tax exemption, so that your tax auditor and your customer can form an idea if that treatment can have been correct. Concerning declaration duties, the last formal aspect which plays a major role, I only have to give you some minor details. You know, I already mentioned in the beginning that the taxpayer has to declare the taxable transactions, first in the annual tax declaration and in preliminary declarations during each month or during so-called preliminary declaration periods in Germany. Now, if something has to be paid by the customer, then also the tax declaration duties are shifted to the taxpayer, so to the customer. The taxpayer is the one who has to fulfill the fiscal obligations from the case, if nothing else is explicitly stated. So if paragraph 13b reverse charge system says the customer is the taxpayer, then also the declaration duty is shifted to the customer. So if a foreigner does a service which is taxable in Germany and the customer is a German business person, then the customer will be made under 13b the taxpayer, and so all declaration duties are also shifted to that customer. That means that the foreigner has, as intended by 13b, nothing to do anymore with the German fiscal authorities. Tax transactions which are taxable but tax-free also have to declare in tax declarations, because the fiscal office reserves the right to check if the exemption has been applied correctly and if your right to an exemption can be proven. Because the basic rule is what is taxable but not freed from tax is automatically liable to tax. And as a tax exemption is something which you claim in your favor, you have to give the proofs. So if the proofs for the exemption are missing or not satisfactory, then the transaction automatically turns liable to tax. And that is why the fiscal administration wants to get a good overview about which transaction you claim to be tax-free. Furthermore, we have to hand in from time to time, additionally, in addition to your regular tax declarations, that recapitulative statement where you list up all the deliveries of goods which you made to entrepreneur customers with the VAT identification number from another EU state. There you give the total amount of deliveries which you made to each individual owner of a VAT identification number. And in a separate part of that list, you declare all the services which you render to EU entrepreneurs or other EU persons with a VAT identification number. That, by the way, first requires that in your accounting, when your accountants type in their invoices, they manage to keep deliveries of goods and services made to the same EU customer with the same VAT number if they that they manage to keep these things apart because they have to be declared separately. When you have an exam or such a thing like that, details are not necessary for this testing point. Then you only have to make a remark. The transaction has to be given in the recapitulative statement. That would be sufficient. Now, just to add a bit, there are also there's also another menu point in the testing scheme which I always add, that is, are there some other peculiar aspects of the case? So is there anything in the case which has been forgotten to comment or which could not be commented until now under the usual testing scheme? So at the end of a good case, you should always check if really everything has been dealt with. And so this point number 6 in my testing scheme is a personal addition to that testing scheme, and it just serves to safeguard that everything has been done correctly, that nothing has been forgotten. And when you learn VAT, you should memorize which few things can only be dealt with at the end of a case. So the question number 6, is there any peculiarity combined with this case which is extraordinary, that serves first to ask yourself, did I read anything which asks for a comment which I could not yet make? And the second thing is, are there some aspects which in the testing scheme can only be placed here? The most important one is, for example, at this place, has the invoice been written out correctly, or has VAT been confirmed, which is not owed by the entrepreneur? In such a case, whoever writes an invoice and confirms more VAT than is owed would have to pay the VAT for this, just because you wrote out that too high amount of VAT on the invoice. And if the VAT on the invoice is too high or not, that is something which you can only check, or that where you can only form an opinion when you know how everything has to be seen correctly and if the invoice has to contain VAT or not. Only afterwards you can compare with what the entrepreneur has really done and if that was okay or not. So checking 14C is one of the points which you regularly have to think about when you come to the end of a case. So 14C is something where you have a short glance to when it comes to that step in the testing scheme. Now let's go on to the last testing scheme entry. That would be questions concerning input tax, which would mean, does the business owner have the right to input tax, for example, for raw materials, services, or anything else which was used to produce the output and which was mentioned in the case? And on the other hand, is there anything which you can say over or concerning the input tax claims of the customer if that customer also owns a business? Well, but this is something for another chapter, so let's end here with paragraph 14C and let's reserve the rest for the next chapter. Thanks very much for watching. I hope you didn't suffer too much under my frozen face during the first part of this video, but I just didn't want to do it again. So perhaps it was even better. Find it out and enjoy that feeling that sometimes even the technique refuses to work when it comes to taxation. Well, okay, goodbye, and I hope to see you back soon. Till the next time.